Morning traders, Paul here with GammaEdge. Today is Tuesday, the 3rd of January. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Overall, the summary for today is just to be aware, JPM rolled their largest fund this past Friday. The new strikes and contract sizes are summarized on this next slide. They are material. They're already starting to show up. You'll see that in the slides here. Market models, we're in cash or short. We've got complete chop going on the short term. Part of that is a result of just last week's pinning. So now with the JPM roll completed, we may get a release here, although we're not seeing that information or that capability right now. Long term, we're still in cash and short. The slopes of the ribbon are downward, and while that is present, we're still in the mode of selling the rips and buying the dips. Be aware that for the SPX, our right goalpost has dropped back to 4,100. It was at 4,200. Minus GEX has dropped from 38.35, which was the JPM strike on Friday, which dominated all the air in the room. It has dropped to 3,800. So we do think these are the two near-term targets, and of course we're very close to the 3,800 strike. Transition ranges in the SPX PM settled, the 0 DTE for today, the 1 DTE for tomorrow, and the combo complex are all overlapping. And that means that we're pretty well pinned in the existing structure. We've got to see some speculation going on above and below. And so until we see that, and today might be that day, everyone coming back from break, we're not going to be able to ascertain a high probability of moving in either direction. We need to see something happen, and right now the structure is not supportive to going either direction. As I said, JPM rolled on Friday. Here are the new strikes, contract sizes. These are for the March 31st quarterly. Now we have the Januaries to contend with, and you can see in relative magnitude, they're actually about a third in the size. They're already starting to show up also, but this is really what we have to contend with at the end of January. Note, generally not a big deal. Certainly present, we're nowhere near the magnitude of the impact that we see with something like this. So overall, we're watchful, but we're not overly focused on this. Market model, here I'm showing the USC, which is the US composite. Breadth is still very, very poor according to the 52-week new high, new lows. You can see that the ribbon is in a downtrend. It's been in a downtrend. It remains in a downtrend. And until this white cumulative tick line gets above it, we have no hope of actually pulling up. So even though we're getting closer and closer and closer, which suggests a breaking point, the white cumulative tick you can see is bound within a very tight range. Again, we think part of that was just the last week structure and the pinning around that 38.35 strike, which you can see very tight price action in general around there for the SPX. And so with this chop going on, we might get more of the same. We are looking for a penetration into the ribbon from below that'll start emboldening the bulls. And we could also drop. Now, if we drop, do we drop to lower lows? Or is selling more prevalent? We simply don't know. Key levels here, I just want to draw your eye over here. Here's that 4,100 and 3,800 in the combo complex. I want to show you, though, we're starting to see a little bit of volatility creep back in with the expected move. This is open, high, low, close. This is not close, close. It's material, so we might actually see a good range starting to develop and a little more volatility come into the week. The PM settled complex, here's that that March 31st JPM. This was put on Friday. This is their new roll strike, 40.65, and you can see it's already up there. Those short calls are already present and certainly are rearing their heads. Just taking a look down, we do think that it's going to be difficult to get above this 39.45 into the close today. Actually, we think there's a little bit lower range here, this 39.25, and you'll see that coming up. To the low side, 3,800, 38.25. Here's the transition. If we continue to play within this range, would not be at all surprised. We need to work things out. It's a fairly ugly delta structure. You can see that the gamma structure, though, is starting to support this 3855, 3860 range, and it's clear sailing to the north in terms of call-dominated gamma once we get above that 3865 level. The 0 DTE, which is really what is vaporizing today, very balanced. 0 DTE shown with just one tile selected. Here's the transition range overlapping the previous range. You can see a couple different areas that we think, because of the delta transitions and just what we're seeing overall, that could be hiding areas. Here's that 3875. If we can get above that 3860, 3865 area, we might have a hope of holding there, moving transition up. On the flip side, though, we want to point out this 3795 level, not the Livermore level, but this is today. And if we get below this, we could get trapped, and it could actually push us downward of 3750 or somewhere in that zone. Note the delta structure is not very supportive in this area, so actually falling down to 3750 through the day would not be a huge surprise. But note, we're really balanced. It's hard to call, and I know you're all looking for definitive, are we going up or are we going down? The answer is yes. The 1 DTE, which is our view of tomorrow, is about the same picture. You can see the delta structures back and forth. Transitions about the same. We have observational data that suggests these areas of Circle 1, Circle 2, Circle 3 could be pockets where we actually do park overnight. When you couple Circle 1 and Circle 2 with very low gamma as well as transition points and low delta, we have historical observations that suggest the dealers like these areas because their overnight exposure is minimized. Not so much here at 3, but certainly at 1 and 2, that is the case. Combo complex, decisively bearish. We've got a lot of put dominant structures in place. And while we have that, the general flow is downward. We need to see additional ITM puts above us. We need to see those close. We need to see the delta start turning green. You can see the delta level or the gamma levels are already at that 3860, 3865 level in the combo structure. That is good. We need to see a neutralization of this 3900, and then that'll open the door potentially to moving north. So we need to see this turn more green, these ITM puts be closed, turn more green, which means we have more call-dominated delta. So we need speculation going in, and currently we just simply don't have it. Here's those JPM March 31st short calls. You can see they're already present in the combo structure, already up there. Very, very visible. To the downside, 3,800, and as I was saying earlier, if we lose 37.95 zone, it does open the door to that 37.50 zone. When we isolate just this week, trying to identify those key gamma levels, 3,900, of course, is a key level. 3,800 is another key level. You can see the 37.50 and the 3,700 levels all starting merging too. So as price moves down, these will grow because gamma is maximized at the money or near the money. And so the key thing to watch here is the behavior down here. Now, constructively, we are starting to see some of these. There's not a lot of puts down here that are speculative puts. We are starting to see these in-the-money calls start to creep up. This is good for the bulls. We need to see more of this. We need to see more of this green starting to form here, and that will be constructive to moving to the upside. Right now, we do think the 39.25 is just a hard limit for us to get above for a number of reasons that I just covered. So just be aware, if we lose 3,800 this week, we could slip south. If we can break out of that 38.55, 38.60 zone, we could push northward of 3,900, but just remember, be aware, we've got this large negative here in the combo complex that we need to overcome. So somehow we've got to neutralize this and get above. Final chart, plus GEX here at, like I said, 4,100. It was up here at 4,200. It's people are speculating and putting this in place, which is good. 38 to the downside, 37, 36, very well defined structure down here. So you can see, a lot of puts in place. A lot of, the distribution favors the put side of the equation, as you saw in the previous data. A couple things to key out here. Call out the JPM Januaries are right here at 41.45. The JPM Marches are right here at 40.65, right? So this was just put on Friday, and you can see it's already a dominant level that we're going to have to contend with as we move forward here. 3,900 is what it is. It's big, it's negative, and you can see there could be a pocket to hide within this overall structure. We're sitting right here, and we're going to have to really, work hard to neutralize this 3,900 in order to advance, move this whole transition zone upwards, and then that will favor the bulls as we go into the month. Failure to break 3,900, it should be very clear on this chart. 3,900 really is where my eye says if we can't get above 3,900 and hold it, there's no chance of pushing northward here, despite what potentially could happen. I mean, we may try to break north, but if this structure does not change, there's not a chance, and then that would open up the door for heading south. So with that, I'll bid you farewell. Make it a great Tuesday. Come and join us at GammaEdge.us. Follow us on Twitter, please. We do post other things there, and I just posted a newsletter on Substack. I urge everyone to read that about pinning and why it occurs. And then here on YouTube, of course, if you like today's content, smash that like button. Let me know immediately that I'm providing the content that you want to see. And more so, subscribe so that you can get notified when Michael, Taylor, and myself post. We try to do 1 to 2 videos a day just to let you know what we're seeing. So with that, take care, make it a great week, and hope to see you in the Discord. Thanks.